Good day, traders. Welcome to another episode of Elliott wave theory. In the first part, we dealt extensively with the introductory part of the course. The second part, which I term part 2, we dealt with the impulsive phase of Elliott wave theory, the impulsive phase, which is the motive wave, this one. All right, today we want to start extensive work on the corrective phase. Okay, haven't understood in the last video on part 2, haven't understood the motive waves, which we said can be impulse and can be diagonal. Both of them are 5 waves, and I gave you what distinguishes between the impulsive wave and the diagonal, and where you can find them in the chart. And I even went ahead to discuss with you the strategy to trade those patterns. All right, but today we are going to move to part 3 of the course, which is the starting point of corrective structure. Okay, I'm going to divide corrective structure into 2 videos because I think it's going to be long if I make it on one video. So I'm going to start the lecture on corrective structure today. And it is important for us to understand corrective structure. You know, I have to drum this to our ears that, in fact, 80% of the time the chart is moving correctively. It is only between 10 to 20% of the time that you find the market going on impulse. All right. So if 80% of the time the chart is corrective, then the more understanding of corrective structure that you have, okay, will tell us how much you understand the market. And the less understanding of corrective structure you have tells us that you know nothing about this market. If you are only looking for impulse, you might not get it all the time. It comes very sharp and go. All right, it just comes very sharp and it goes away. But most of the time, the market is correcting. So you have to be able to, you know, analyze this corrective structure in order to depict the next impulse and when the next impulse will come. That's why understanding corrective structure is very important. Okay, what are these corrective structure, guys? You know, I told you in the previous video on this course that in every impulse that you see in the market, what is this impulse? Fast move in the market, fast move in the market. Let me show you fast move here. This is an example of fast move in the market. You see, in every sharp move to the upside, you need this correction. Okay, you need this correction. So in the last lecture, we have dealt with this fast move to the upside. Now we are dealing with what? We want to start dealing with this corrective structure. After corrective structure, you need another push to the upside. Do you understand now? Look at another one here. You can say this is a sharp move to the upside. You need another correction to have a sharp move to the upside. Can you now see that if you understand that this is an impulse, you see it's a sharp move, is an impulse, and you are understanding that this is a correction that is going on, your instinct, your common sense will tell you that this move to the upside is going to come. That is why I keep saying it, that you don't need any degree for you to be able to trade financial market efficiently. All you need is common sense, guy. All you need is common sense. And that's what I'm showing you here. Okay, so haven't gotten this, we want to see the 4 different types of corrective structure that we are going to be studying in this lesson. 4 types of corrective structure. 4 different types of corrective structure, guys. Number 1, we're going to be looking at what we call zigzag corrective structure. Okay. Number 2, we're going to be looking at flat corrective structure. And then number 3, we're going to be looking at triangle corrective structure. Yeah. Okay. triangle corrective structure. And then last but not the least, I'm going to be looking at what is called combination corrective structure. Combination corrective structure. And the combination corrective structure are WXY, and WXYXZ corrective structure. Okay, so these are the 4 different types of corrective structure we are going to be looking at in our Elliott wave theory course, guys. But for the purpose of this present video that is running, we are only going to take zigzag corrective structure and flat corrective structure. Okay, we are going to be taking triangle and combination corrective structure in the next episode of the video I'm going to drop on Elliott wave theory course. Okay, so I don't want to make the video to be too long. So it's not as if I cannot take everything, but the video is going to be too long, guys. So I don't want it to be too boring. So I'm going to take zigzag and flat corrective structure in these videos. Guys, pay attention because this is the basics foundation of understanding forecasting, market forecasting. If you don't know Elliott wave theory, guys, and you don't understand this corrective structure and how they are linked together with their impulses, you're not going to understand where the market is going next. And for my students that have been following me who understand fundamental analysis, and we want to add fundamental analysis to this structural behavior as a corrective structure, you are going to make it big in this market. All right, we're going to make it big in this market because as corrective structure is forming, you already know where the market is going based on fundamental and then based on technical. You are adding the two together and you are getting a super result. Okay, that's why you see when we lose, it's not because our direction is not right, probably our timing is wrong. And you know, we seldom lose, we rarely lose. You know, it's not as if we don't lose, but we rarely lose. When it comes, it's a mistake of timing, not a mistake of direction. All right, so we are going to start with zigzag, guys. Zigzag. Let's start with zigzag. Zigzag. Okay, so you see that if we have, when I was teaching you motif waves, I taught you that when you have an impulse that is with one, let's say, let me construct it perfectly. When you say you are having a wave that is moving down, the wave that is moving down, the wave that is moving down, you now see one now broke this structure to the upside. This is, you know, this was the last resistance, and then this one has broken it to the upside. That's a break of structure, and this is the wave one. All right, I was teaching you the other time that wave two can retrace even up to 78% retracement before it makes a move to the upside to form wave three. So the issue now is that this wave two that is coming down, I also taught you in that video that this wave two can be zigzag, it can be flat, it can be triangle. Those are the corrective structure that can stay in wave two. So we are now saying that we want to start learning the shape, the formation, and the rules, you know, that govern the formation, the rules and guidelines that govern the formations of those structure. All right, so we're going to start with zigzag. So this zigzag, how does it look like? This is the structure of a zigzag. One. No, let me do it this way. Okay, this zigzag, 1, 2, 3, 4, 5. Correction, 1, 2, and 3. Then 1, 2, 3, 4, 5. Okay, this is the structure of a zigzag. And if we have to label it properly, then you have 1, 2, 3, 4, and 5. And then another one here, you have 1, 2, 3, 4, and 5. And then you have the ABC correction in the middle, and you have that one as with A, with B, with C. Okay, so this is the structure of a zigzag corrective structure. So the wave structure of a zigzag corrective structure is therefore 5-3-5 structure. 5, 3, and then 5 structure. And then this 5-wave structure to the downside, you label it with A, and then 3-wave pullback ABC, you label it as with B, okay, and then 5-wave downside, you label it as with C. So you can see that the structure of a zigzag is 5-3-5 structure. But listen to me very clearly. Do not start to be looking for wave 1, wave 2, wave 3, wave 4, wave 5 in a zigzag. If you have a move to the downside, if you have this move, let me show you an example, guys. If you have a move like this, okay, if you have a move like this, let me show you real quick. If you have this move like this, you can see that it's difficult for you to really be able to get wave 1, wave 2, wave 3, wave 4, wave 5 in this move. But this is an impulse. Do you understand? I always have to show you in this shape so that you'll be able to know that the wave structure of a zigzag is 5-3-5. With A here, that end here, it starts here and end here is 5-wave structure. Wave B is 3-wave structure to the upside, and wave C is another 5-wave structure. But haven't had the understanding that if you have a sharp move like this, you may not be able to identify 1, 2, 3, 4, 5 waves there. So, but it still qualifies as an impulse. Look at this one, for instance. You are not able to calculate 1, 2, 3, 4, 5 there, but it still what? It still qualifies as an impulse. So for that reason, what is important for us is to know the characteristic of wave A, know the characteristic of wave C, and know the characteristic of wave B. Therefore, I can now draw my impulse for you like this. Can therefore draw this impulse like this. I can say impulse is 5 waves down, is very sharp, and then 3 waves pull back, is very slow and sluggish, and very identifiable, and then a move down, very sharp. Okay, so this is still a zigzag corrective structure. This is still a zigzag corrective structure, guys. Are you getting it? So are you getting the gist now? So you have this sharp move, you have this 3-wave corrective structure in the middle, and you have another sharp move. So you can now label them like this, guys. You can now say it is this is wave A here, wave B here, and wave C here. So now what you have to do for me is that you have to recognize the fact that wave A is an impulse because it's 5-wave structure, as we learned in the previous video. Wave A is equal to what? Impulse. And you know the characteristic of impulse? Very fast and very sharp. Okay, very sharp. And then wave B is equal to what? Correction. Correction. And then wave C is equal to what? An impulse. Okay, and every time I mention an impulse is a 5-wave structure. All right, but I have told you, you may not see with 1, 2, 3, 4, 5, because some of you will now be looking for how to identify with 1, with 2, with 3, with 4, with 5. Do not waste your energy on recognizing the wave count. Do not waste your energy. What you should, devote your time on is the characteristics of wave A, wave B, and wave C. Anytime you see wave B must always come in 3 waves. All right, wave A can be very sharp, wave C can be very sharp, but wave B will always come in 3 waves. Where are the 3 waves? Wave 1, wave 2, and wave 3. Okay, that is, you don't name it 1, 2, 3 because excuse me, it's a correction. So it is A, it is B, and it is a C. All right, so this is the anatomy of a zigzag corrective structure. Okay, so another thing I want to show you in zigzag corrective structure is simple. You have it like this. This is A, this is B, and this is C in the middle, and you have this push. All right. So this end of wave B of this wave B, you know, I told you this is wave A, this is wave B, and this is wave C. Wave B always come to 50% retracement of wave A. How do we get 50% retracement of wave A? Come to fib retracement here, click this one, put it here, drop it here. Where is 50%, guys? This is 50% of wave A. This is wave B here, ending here, 50%. Maximum 61.8% of wave A. All right. If it comes to this place, all right, if it comes to this level, guys, it's no longer a zigzag corrective structure. It's now assuming another structure that I will show you later. But for now, we are dealing with a zigzag corrective structure. We are saying in a zigzag corrective structure, wave B must not pass 50 to 61.8% retracement of wave A. That is very, very important guidelines, guys. I have applied this, guys. I have applied it, and I can show you example where I applied it. Remember, we're on Euro GBP here. So let's go to CAT CHF and let me show you the structure of a zigzag corrective structure that I apply with my intermediate students, and we cut the move straight away. Can you see? Let me clean up all these guys. All right, let's go to let's say 15 minutes so that it can be clear. I want it to be very, very clear, guys. Look at it, guys. Can you see? What do you see here? You see an impulse here after the end of this structure, this rally. You see an impulse. What do you see? A, B, and C. Okay, this is a zigzag corrective structure, guys. And when you take the fib from here to here, you see that this zigzag terminates at 50 to 61.8 retracement of A. Can you see? So you have with A, we have with A of a zigzag here. We have with B, and you have with C. Can you see? So this is the impulse. This is the corrective structure, and then boom. So this wave B here that must be in three-wave structure is coming in the form of a zigzag. Can you see it now? So that is just an example. Let's go back to our lesson. Where is Euro GBP? Okay, real quick. All right. So now let's go back to our lesson. So that is a zigzag corrective structure. You must know that zigzag corrective structure the wave B must come to 50% or 61.8% retracement of A. If it breaks 50 to 61.8 and it's going to 78% of A, is no longer, it no longer qualifies. It no longer qualifies as a zigzag corrective structure, and I will tell you why in a later on. Okay, so this is the anatomy of a zigzag corrective structure. So know that it is 5-3-5 structure. Wave A is an impulse, wave B is a correction, which must be in three waves, and then wave C is an impulse. Okay, so when I say impulse, what do I mean? I have told you before, impulse is a sharp corrective structure. So wave A is made up of 5-wave structure, very sharp. Wave B is a 3-wave structure that can come in the form of zigzag itself, in the form of flat. All right, don't get this, don't be confused, guys. Let me show you something, because that is where people are confused. This is a 3-wave structure, and this is called a zigzag. Okay, and then I am saying that this wave A is very sharp, this wave B, wave C is very sharp. Then this wave B here in the middle is corrective in nature. This is A, B, and C. This whole structure ABC is a zigzag. But I am saying that this middle here must be in three-wave structure. Even though this one is sharp and fast, this one sharp and fast, this one here must be a three-wave structure. And that three-wave structure can come in the form of flat corrective structure, okay, and it can come in form of zigzag itself. Zigzag itself. So when you have zigzag here as wave B, you are now having zigzag inside zigzag corrective structure. I don't know if you are understanding me. If I say there is zigzag inside zigzag corrective structure, it then means that the overall corrective structure is a zigzag, but the wave B is carrying a zigzag. Boom. But if I'm saying that we have flat inside zigzag corrective structure, it means that this is a corrective structure, but inside this there must be three waves. You are having 1, 2, and 3, which is not a zigzag, but a flat corrective structure. You can see this one is deep down and this one comes up, okay? When you have this, you have a zigzag corrective, you have a flat inside a zigzag. For instance, look at this. You have a move down and you have 1, 2, and 3. So this does not qualify as a zigzag. Why? Because this does not come to 50% retracement of A. Do you get now? So that is how it is analyzed, guys. All right. So I've told you that wave B retraces to about 50 to 61.8% of wave A. It's very important. So usually wave A and wave C are of equal length. That is another thing that you must keep in mind, guys. That is another thing you must keep in mind. Usually, not every time, but usually wave A and wave C are of equal length. You have this, you have wave B here, and then you have wave C here. Okay, equal length. This wave A here, this one here. Let me show you really quick, guys. This one and this one, they are usually of equal length. So how do you get that equal length? We make use of what is called trend-based fib extension. Look at it here, guys. So you drop it here, drop it at the end, take it back to the end of wave B. You now project where you have 100% retrace extension. Look at it here. This is where this wave C is equal to what? Wave A. Okay, and when you are trading it and you have seen that this is going to be a zigzag corrective structure, you are going to be targeting end of this correction at 100% fib extension of wave A. Do you understand? So wave A and wave C of a zigzag are usually equal, while wave B retraces to what? About 50 to 68% retracement of A. Do you understand? So the question is this: where can you find zigzag, guys? Where can you find zigzag in the chart? I have to show you areas where you can find zigzag in the chart. You know that zigzag is a corrective structure. So in an impulse, you have two areas where you can find zigzag. Okay. So you have this is wave 1 of an impulse, wave 2 of an impulse, wave 3 of an impulse, wave 4 of an impulse, and wave 5 of an impulse. Can you see? So since I have told you that zigzag is a corrective structure, and within these waves here, you have that this is a push, this is a push in the direction of the trend, this is a push in the direction of the trend. So within an impulse, which is 5-wave structure, 1, 2, 3, 4, and 5 here, you now see that only wave 1, wave 3, wave 5 are in the direction of the trend, which is upside. But wave 2 here and wave 4 here are not in the direction of the trend. They are against the trend. You can see them coming down. So these ones that are against the trend are the ones that are having corrective structure pattern, and of which the first one I'm discussing with you in this video is a zigzag corrective structure. So you can find zigzag in wave 2 of an impulse, and you can find it in wave 4 of an impulse. Do you get it now? You can find zigzag in wave 2 of an impulse, and you can find it in wave 4 of an impulse, because it is a corrective structure. And these are the two areas where you can find corrective structure in an impulse. Okay. Another thing I want to tell you that is very instructive to know at this stage is that, you know, we have said when we were discussing the characteristics of, you know, wave 1 to 5 of an impulse, we said wave 2 can even go as long as 78% retracement of wave 1. So if that is the case, you can see that zigzag corrective structure is not a sideways corrective structure. It's a corrective structure that flashes down. So meaning that it is most usually found in wave 2 of a correction. Because if it is in wave 3 and wave 4 of a correction, it then means that because it is projecting down, it is most likely coming to cut the boundary of wave 1. And as you have known, wave 4 is not supposed to come to the territory of wave 1. That is the rule of formation of wave 4. If it does cross the territory of wave 1, it is no longer a wave 4. It is another structure entirely, guys. Do you understand? So I wouldn't want to see, it is not a taboo. It is not an abomination to see zigzag corrective structure in wave 4, in as much that it does not come to the territory of wave 1. Do you understand? And you usually see zigzag in wave 4 if wave 3 is extended. So you can see zigzag in wave 4, definitely, because as this wave 3 is extended, it has gone up too far that even when this zigzag is forming, it's not going to, the end of the zigzag is not going to come to the territory of wave 1, because wave 1 is far below right here. But you can find it, and very often you can see it in wave 2 of an impulse. Do you understand? Where else can you find zigzag corrective structure, guys? Where else can you find it apart from wave 2 and wave 4 of an impulse? It can also be found in wave B of a correction. Oh yes, I told you zigzag inside zigzag the other time. What do I mean by zigzag inside zigzag? You have 1, 2, and 3. This is zigzag, and you have a move to the downside. This whole move, A, sharp down, correction, sharp down. This is a zigzag. And within this zigzag, the wave B, there must be a 3-wave structure, is coming in form of zigzag again. 1, 2, and 3. This is a connector. This is, I always call this a bolt and nut. This is bolt and nut that connects this plank and this plank together. You can see this plank is long, this plank is not, it's long. You see the bolt and nut in the middle. You see this one, long, bolt and nut here. Okay, long, both are not here. What are you expecting next? Long. So this is super simple, guys. Super simple. Once you get the concept, you have gotten it forever. This is the foundation of chart analysis, guys. If you don't know Elliott wave theory, you're going to suffer in analyzing financial market. I'm telling you, you're going to suffer so much in understanding it. You see, some of us, when we give our analysis, when we give our forecast, you see it playing out correctly. I showed you guys in my Telegram group 10 forecasts. All the 10s went accurately. There was no one that missed analysis. No one. Even where there was going to be correction, I showed you that there will be correction here. And it did happen exactly as I forecasted. What am I using that is different? It's Elliott wave theory. I'm only using it. I'm only, using it together with some other, theories, guideline, methodology based on experience, and we are getting it right. Do you get now? So where else can you see a zigzag corrective structure, guys? You can also see a zigzag corrective structure in WXY and WXYXZ. All right. Usually, in a WXY structure, where I'm still going to teach you in the next lecture, but for the purpose of this zigzag, I'll just show you what a WXY structure means. So when you see an impulse, you see 1, 2, 3, it's a correction. This one's supposed to be an impulse, but what if it is 1, 2, and 3? Then it means you are expecting this 1, 2, and 3 bars. Can you see before you now see that impulse? So can you see that you have 3, 3, and 3? So 3, 3, 3 structure is a WXY structure. But what I'm showing you right now, real quick, that I want to understand, I want you to understand is that each of these structure here is made up of a zigzag corrective structure. So you can find zigzag in a WXY structure. Do you get now? You can find it in a WXY structure. So most of the time, when zigzag appears in wave 2 and wave 4 of a correction, it usually gives up to 61 to 78% retracement. You have to know that. So because of the guideline of wave 4 that must not retrace to the territory of wave 1, zigzag usually appears in wave 2. And that is not to say that it's a taboo for it to occur in wave 4. So that is just the summary of the rules and guidelines that governs the formation of zigzag corrective structure. I believe we understand it perfectly now. All right, I believe we understand. If you think I'm too fast, it's just because I don't want to make the video too long. You can watch it again and again and again. You're going to get it perfectly. Once you get the concept, it's just to keep on flying with profit. All right, the second corrective structure we're going to take a look at this evening, guys, is a flat corrective structure. We call it flat corrective structure. That's the number 2. We have flat corrective structure. Flat corrective structure. Okay. Why do we call it flat, guys? Because it is sideways in nature. It is sideways in nature. That's why we call it flat corrective structure. So before I even go there, let me show you flat corrective structure here. 1, 2, and 3. This is an expanding flat corrective structure. Do you see that it did not come down very well? This corrective structure, both are not. It doesn't come down very well. Sideways in nature. It is flat in nature. That's why we call it flat corrective structure. Okay. And this corrective structure is made up of 3, 3, 3, 5 or 5, 3, 5 structure. Let me explain. Let me explain you this structure, guys, before we talk on the variation of flat corrective structure. Assuming you're having a move to the downside, an impulse to the downside, you are now having 1, 2, 3, 4, and 5. 1, 2, and 3. 1, 2, 3, 4, and 5. And then you push down. Okay. This is a 5, 3, 5 structure. So we can label it. You can label it this. The middle is usually A, B, and C. And then the impulses, you can label it as 1, 2, 3, 4, and 5. And then this one, 1, 2, 3, 4, and 5. So what do you see here? This is a 5, 3, 5 structure. Why is this one 5? 5 waves to the upside. Why is this one 3? 3 waves in the middle, 1, 2, and 3. Why is this 5? 5 waves to the upside. That is why we say flat can either be 5, 3, 5 structure, or it can be 3, 3, 5 structure. So let me give you the anatomy of 3, 3, 5 structure. Flat can also be like this. Let's say there's a move to the upside. It can be 1, 2, and 3. Then 1, 2, and 3. Then 1, 2, 3, 4, and 5. And then you have a move down. Okay, this will signal the end of correction, and you have a move down. So if we have to label these guys, this is wave 1, wave 2, wave 3, wave 4, wave 5, and then you have 3-wave structure is never labeled 1, 2, 3. It's rather labeled A, B, and C, and then this one is labeled A, B, and C. But then you have 3 waves here, 3 waves here, and 5 waves here, and then you have a move to the downside. This is another example, and this is a 3, 3, 5 structure of a zigzag. Of a flat corrective structure. In any flat corrective structure, the end of the wave must be an impulse. Get it very clearly, guys. The last wave C, okay, wave C must be an impulse. This is wave A. These 3 waves down is wave B, and then this 5 waves up is wave C. So this must always be an impulse. So that is the structure of a flat corrective structure. Okay, that is the structure of a flat corrective structure. Now we have 4 variations, guys. 4 variations of flat corrective structure. Flat corrective structure can occur in 5 different variations, and I must tell you that flat corrective structure is the commonest types of corrective structure you find in the financial market. So 4 variations, 4 variations. Okay, 4 variations. Okay, just follow. Number 1, you have what we call, let me type so that I will be fast about it. Let me type. Okay, number 1, you have what is called regular flat. And then number 2, you have what is called, what we call running flat. Running flat. And then number 3, you have what is called contracting flat. Contracting flat. And then number 4, you have what is called expanding flat. Expanding flat. All right. So these are the 4 different types of flat that we have. Okay, just manage this right up, just manage it. I just want to keep it here, guys. Regular flat, running flat, contracting flat, and expanding flat. These are the 4 different types of flat that we have in the market. I'm going to teach you this one after the other. Listen to me very carefully, guys, because your proper understanding of flat is very crucial to the general understanding of Elliott wave theory, because I have told you that 80% of the time markets stay in a corrective mode, and the kind of corrective structure that are usually developed are flat corrective structure. It is even rare for you to see other corrective structure like triangle. I barely see triangle as a correction in 3 to 4 months or 6 months of trading. It's only occasionally that you find triangle. You don't find it. It is flat. You keep on seeing every day, guys. So that is why it's important you pay attention. So first one is a regular flat. This is how you draw a regular flat, guys. Okay, it's an impulse. You know, you have wave A, wave B, wave C, and you have a move to the upside. So let me just draw the 4 variations before I explain to you. All right, then the second type is a running flat. A running flat is an impulse. You now have a move down. To this one break the top. This one cannot get to the bottom. I have a move up. This is a running flat, guys. The third variation is what we call a contracting flat. Contracting flat, you have a move up. You have this one come this way. You have this one come this way. Does not break the top. You have this one does not break the bottom. I have a move to the upside. This is a contracting flat, guys. And the last but not the least is an impulse. You have this one with A. Wave B break the top of the beginning of wave A. Wave C break the end of wave A. And you have a move to the upside. This is a contracting, this is an expanding flat. Now let's label them. They must be labeled as A, B, C, with A, B, and C, with A, B, and C. Tell you the difference and the variation with A, B, and C. And then this one with A, B, and C. Okay. Do you get it now? So can you see it now? So these are the 4 different variations. So this first one. So this first one is a regular flat. So let's deal with this regular flat first. So I want you to take cognizance. What differentiates all these type of flat, guys? What differentiates, what gives them this variation that you are seeing is with B and with C. With A, we always remain the same, guys. With A, we always remain the same. Already I have told you wave A of a flat is usually either 3 waves or 5 waves. Wave C is always 5 waves. Wave B is always 3 waves. But there are moments where wave B is very short. Okay? There are moments where wave B is the same length with wave A and wave C. And there are moments where wave B is longer. And there are moments where wave B is in the middle, a bit short. Do you understand? So that is what is going to give meaning to the different variation of flat corrective structure that you have. Okay. Now, the first one is regular flat. Regular flat here, look at the end of wave B. In a regular flat, wave B does not cross the beginning of wave A. Look at wave A here. This is the beginning here. Okay, look at wave A here, the beginning here. When wave B now come here, all right, when wave B now comes here, it does not break this top here and then come down. And when wave C is coming down, it does not break the end of wave A here. So when you have this type of flat in the structure, you call it a regular flat. You call it a regular flat. Okay. The second type of flat that you have is what is called a running flat. I told you that wave B always remain the same, and wave A always remain the same. Look at wave A comes down. But in this case, instead of wave B ending at the beginning of wave A, as you have in a regular flat, it will come and break it to the upside. Break it, can you see? Break it to the upside to about 110% of wave A. Look at the length of wave A. When it comes here, it is 100% at this level, but it will break it to about 110%. After breaking it to about 110%, you now see it will now come down. And when it's coming down, instead of it to come down to the level, to the end of wave A here, it doesn't get to the end of wave A here. It will stop here and begin to move upward. This is called a running flat. Do you get now? Can you see that B is giving us B and C? The length of B and C are what is giving us variations. And at times, it is only with B that will give us variation in terms of its length. Okay, now, look at the third type of, corrective structure or flat corrective structure, which is called contracting flat. Look at it. With A remains a gentleman, as it usually is. But look at wave B here. This irregular flat, wave B does not pass the level of the beginning of wave A. In a running flat, wave B has passed it to about 110. But in the case of, contracting flat, it's contracting. Wave B does not even get to the start of wave A. This is wave B. And then wave C, when it's coming down to form wave C as an impulse, it does not even get to the end of wave A. Very short. So this becomes a contracting. It's contracting up and it's contracting down. That is why we call it a contracting flat. And then you now have a continuation to the upside. Remember, I told you, the essence of corrective structure is that when you have an impulse, you have correction and you have a move. It is this correction in the middle that we are analyzing. And it is crucial to your understanding or to your understanding of the entire analysis of financial market. It's very crucial, guys. You can apply this to crypto. You can apply this to forex market. You can apply this to bond market. You can apply this to commodity market. You can apply it anywhere. If your currency is on chart, guys, you can apply it there. All right, let's go to the fourth type of flat correction. You see the fourth type of flat correction. You see A remains a gentleman. What is B doing? B has broken the starting point of A to the upside. Okay, and what happened to C that is coming down? It has also broken, the end of wave A. So when you have a wave B that broke the starting point of wave A, and you have a wave C that broke the end of wave A, then you are having what is called an expanding flat. An expanding flat, guys. An expanding flat. But in this case, to what limit must this expanding flat go before we will disregard it as not expanding flat again? This is where you have to use a trend-based fib expansion, guys, extension, all right? You put it at the beginning of wave A, drop it at the end of wave A, drop it at the end of wave B, okay? You want to see where there is 1.618, all right? 1.618 extension, guys, is 1.618 extension, guys, is the limit to which we can tolerate that wave C to extend to. Can you see it here, guys? Can you see it here, guys? This is exactly at 1.618. Let me do it again. Somebody is not getting it. I know. Somebody is not getting it. I know. Somebody is thinking, how is this guy doing the fib extension? How is he doing it? Let me erase this one, delete. All right. Look at it here. I am telling you that wave C can break the level of wave A, wave B can break the level of the starting point of wave A, and wave C can break the terminating point of wave A. But to what extent does this wave C has to go before we would disregard it as not wave C again? Before we would disregard this structure as, you know, as an expanding flat? We use Fibonacci to do that. What do we do? Comes to Fibonacci here. Look at Fibonacci retracement. No, you're not going to pick that one, guys. Pick trend-based fib extension. How do you project it? You see the beginning of wave A here. Drop it here, guys. Drop it again. You are going to drop it in 3 points. It is only in fib retracement that you drop in 2 points. Fib extension is 3 points. Drop it here at the end here. Take it back to the end of wave B here. Drop it. Okay, drop it. Where do you see 1.618? That's the level here. This is where we want wave C to end. We don't want a wave C to come down here. Once it comes down here, we will disregard this structure as an expanding flat. It means that what is going to happen? You have understood this fib now. Let me take it off so that we can analyze further. Okay, what it means is that if this comes to this area, if you extend here, it means that this wave C is unnecessarily too long than we expect. Therefore, we will expect corrective structure here for this to move down. Can you see now? But if it stops exactly at 1.618 extension of wave A to B, wave A to B and to C, then we know that this is expanding flat corrective structure. Is that okay, guys? Then you know this is expanding flat corrective structure. When we are doing practical application of Elliott wave theory, I'm going to show you some of these, you know, fib levels, conditions, rules, and guidelines. I'm going to show you practically on the chart, guys, and you're going to love it. You're going to enjoy it because I've enjoyed it so much, and I'm giving credit to my master Victor Manena from South Africa. This is a great guy. He's one of the best, you know, Elliott wave trader you can find anywhere in the world. He put us through this theory, and I'm giving credit to him, guys. All right, so let's just continue. All right, so you now understand the extent to which we can tolerate wave C to get to. So when you see this structure like this, it is an expanding flat. It is an expanding flat. So you can see the 4 variations of flat corrective structure. Remember, after impulse, you see correction and another impulse. So before this, another impulse come, which you want to trade. You don't want to miss this. You don't want to miss this. You don't want to miss this trade. You don't want to miss this trade, guys. But before you take all this trade, you must understand what is happening in the corrective structure. So if this is a regular flat, you must understand this is a regular flat. And how is this a regular flat? This one will be very sharp. This one will be very sharp. This one will come in 3 waves in the middle. This one will be very sharp. A, C will be very sharp. This one will come 3 waves in the middle. This one will be very sharp. This one will be very sharp. This one will come 3 waves in the middle. This one very sharp. This one very sharp. This one 3 waves in the middle. Why are they sharp? I told you that wave A is an impulse. Wave B is a 3-wave structure, a correction, and wave C is an impulse. That's why you are seeing A and C are sharp, and then B is corrective in nature, very slow and sluggish, and usually in 3 waves. Do you understand, guys? So that is the basics, understanding of the four different types of corrective structure. All right. So now I have to discuss something that is very rare. You might not see it in any books, you might not see it anywhere, but based on experience, I have to discuss this with you guys. It's very, very important. You have to know this guy. That's what I call structural transformation of flat corrective structure. Let's quickly do that, guys. Structural transformation of flat corrective structure. Okay. All right. Okay. Just hold on, guys. Okay. Structural transformation of flat corrective structure. Okay. Structural transformation of flat corrective structure. Guys, this is very important, guys. This is very important, guys. Many people have lost a lot. Many people call themselves Elliott wave analysts, but honestly, they do not understand this part. And that is why they see a very clean structure and they still lose it. Okay, so now let me explain to you what we mean by structural transformation of flat corrective structure. You see, what it means is that flat corrective structure has 4 variations, and these 4 variations can transform from one type to the other. So, and the way and the method, the way and manner you trade flat corrective structure is different from how you trade contracting flat corrective structure. It's different from the way you trade, sorry, I missed a line. The way you trade regular corrective structure is different from the way you trade contracting flat corrective structure. It's different from the way you trade expanding flat. And the way you trade expanding flat is different from the way you trade a running flat corrective structure. So if you are applying the methodology you use in trading a regular flat, if you are applying it on regular flat and regular flat now transform to another type of flat, you are going to lose. If the way you are trading a running flat, if you apply that same system, to a running flat, if that pattern transform to an expanding flat, is going to give you a loss. So that is why it is essential for you to understand structural transformation of flat corrective structure. Now, listen, guys. Running flat can transform to expanding flat. Let's start from that. Running flat can transform to expanding flat. Let's draw a running flat. A running flat is this. Let me do a downtrend this time around. You have a move down, running flat. You have A, is a gentleman. B comes to break the top. C cannot get to the top. And then you have a move down. Can you see? This is a running flat. So let's label it, guys. Let's label it ABC, A, B, and C. Then you have a move down. In the other, when I was discussing the 4 variations, I was using the example of uptrend. Now I'm using the example of downtrend for you so that you understand it. Okay, you can rewind the video, go and study how I drew the other one. Okay, so now you have this. We want to look at how this running flat can transform. Assuming you have taken a trade, we want to see how it can transform to what? I can transform to an expanding flat. Assuming you have taken this trade to be a running flat, and at this level right here, real quick, guys, let me show you. You have taken a sell here to the downside, looking at this to be a running flat. Okay, what of if this one now make a corrective structure here and now develop to be something like this? Let me show you real quick, guys. Now have this. A is a gentleman, B break the low. Look at, you think it's a running flat here, you now give you corrective structure, boom to the upside. This has become an expanding flat. Can you see, guys? This has become an expanding flat. You can now see that there is already a structural transformation from what? From a running flat to what? To an expanding flat. Can you see? There is structural transformation from a running flat to an expanding flat. And then, if you are taking your sell, guys, at this level in a running flat, you are taking your sell at this level, guys, to the downside. Where are you going to put your stop loss? You put your stop loss here. Is that not? But when there is structural transformation from this running flat to an expanding flat, you have a corrective structure here, and this market move boom to the upside. What happened? Your stop loss is taken. Do you understand now? Your stop loss is taken. So I always advise my students, if you don't understand behavior of the market very well, do not trade a running flat, because it has potential to transform from running flat to an expanding flat. So now, what do you do to mitigate against this kind of occurrence? What do you do to mitigate it? I'm going to show you real quick, guys. If you are taking a trade here, right here, real quick, let me show you. If you are taking a trade here, guys, you are taking a trade here, and you are taking this structure to be a running flat. What of a situation where instead of you, this is supposed to be a sharp move, an impulse, but instead of you to see an impulse, you are seeing a correction here. Hey, this is a signal, guys, that this corrective structure here is going to break up to the upside for this structure to transform to an expanding flat. So what do? Close your trade. Close your trade. Let this move come. And as soon as the move come, break this top, get here. This has become an expanding flat. You can now remember expanding flat. You have wave A here. Wave B breaks the start of wave A, and then this is B here, and then wave C break the end of wave A. This is an expanding flat. And in as much as you drop this fib extension and it does not pass 61.8. Look at it. It does not pass this level, 61.8. It qualifies as what? As an expanding flat corrective structure. Do you understand, guys? So this is how you prepare yourself. So I've told my student, do not trade a running flat. So, but there is another way by which you can confirm that this structure is actually a running flat. You know, I have showed you how it can transform, how running flat can transform to an expanding flat, and how you can mitigate any kind of loss that can result from that transformation process. But I want to show you real quick, guys, what you have to see in order to confirm that the structure that has actually happened or that has actually formed is a true running flat. And let me show you. Let me clean this, guys, so that I can show you. All right, let me clean this. Okay, so if you have the structure like this, you know, you have impulse, you have wave A, gentleman, wave B has to break the level start of wave A, and wave C does not get to the end of wave A. This is a running flat. Okay, before you can trade a running flat for the continuation move to the downside, it must come to break the level, the start of wave C. It must break it this way. So what do you see here? Let's label it real quick, guys. This is A, this is B, and this is C. Okay, so this is now a confirmation of a running flat because the continuation move to the downside has broken this level. It has broken this level. And then after it has broken that level, it is not possible for this wave to now start moving from here to go and form expanding flat. No. It doesn't work that way. So guys, what are you now expecting for you to take this trade to the downside? Guys, just come, take your fib level, guys, from here, take it from here to here, get 50 to 61.8, look for this pullback here to hit this level, and after it hits this level, guys, take your trade to the downside. Very simple, guys. Simple, guys. These are the theoretical guidelines that we have to combine together to make decision, to make buy and sell decision. You don't just come to the chart and start buying, selling, buy, selling. I told my students you have to start from fundamental analysis. Let fundamentals give you the direction of the trend, because every push you are seeing in the market, the origin is fundamental analysis. So as soon as you get the fundamental basis why the trend must proceed in that direction, you have to come and bring technical alignment into fundamental analysis for you to know what you are, for us to believe you know what you are doing. Do you get, guys? So this is how to confirm formation of a running flat, guys, and to prevent losses in the market. You don't take a trade, you don't take a sell directly from here for a running flat. No, allow it to give you confirmation of that structure before you look for pullback and sell. And if it's correcting at this level, guys, if it's correcting at this level, guys, at this level, if it's correcting, you know the possibility of transformation into an expanding flat is there. So you close your trade and you look for this wave to the downside. How do you look for this wave to the downside, guys? Always wait. If you cannot catch it at the level that the banks are taking it when it's grabbing liquidity, let it break this previous structure low. Let it break it. The next pullback is your trade, and then move to the downside. It's simple. This is where you're getting, guys. It's where you're getting, boom, boom, here. All right? That's where you're getting. You don't get in here if you don't know how to understand liquidity. If you don't understand liquidity, leave it. Let there be structural break, you get in here. Okay? So that's one example of structural transformation of flat corrective structure. Let's go to the second scenario of structural transformation of flat corrective structure. Contracting flat, guys, can transform to what is called a regular flat. Okay, let me show you real quick how contracting flat can transform to a regular flat. So let me draw contracting flat. This time around, uptrend, up, contracting flat, A behaves normally, C comes and doesn't come to the start of A, and C comes and doesn't come to the start of, to the end of A, and then you have a move to the upside. This is a contracting flat, guys. You see, it's easy for me to draw it for you without looking at any book, without looking at any structure. It has become part of me. And that is what I want you to do. I want you to lay a proper foundation where all these structures, all these theories will become part and parcel of you guys. Now, let me draw how it can transform to a regular flat. Let me draw a regular flat. Look at a regular flat. You have impulse, you have with A, gentleman, you have with B the same level, you have with C the same level, and then you have boom to the upside. Can you see? So now, if you have a structure like this, and you are taking this structure to be, a contracting flat, okay? You are taking it to be a contracting flat this way, okay? For it to move. What of if you have taken the buy here, guys, and then the market now decides, after taking the buy, it now started to consolidate and move down to come like this. Can you see that the structure that ended here has transformed to the one that ended here? When it now comes to this level, this structure and this structure are now the same. They're not the same. So you can now see just a little move down. A contracting flat has changed to a regular flat. And when it was like this here, and you took a buy here, where was your stop loss, guys? Stop loss here. And then, because of that transformation, what happened? Your stop loss is hit. And that is the end. So, if that is the case, if you want to mitigate this kind of problem happening, how do you now approach trading a contracting flat? A contracting flat must be traded after wave B is broken to the upside. Remember, this is wave A, guys. This is wave B, guys. And this is wave C, guys. So the only confirmation that this is a running flat is when this B level is broken to the upside. And as soon as it's broken to the upside, what will you do, guys? Take a fib of this length, look for a retracement of 50 to 61.8, and then look for continuation move to the upside. Okay? This is simple, guys. This is simple, guys. Another thing you can do is that you must wait. Not even another thing. You must wait to ensure that B is broken to the upside for confirmation of a contracting flat corrective structure. Or you wait, if there is corrective structure at this level, wait for this to break to the downside so that this will be a regular flat. You now take your trade from here to the upside. Simple, guys. So this is a bonus for you guys, which might be difficult for you to find anywhere. I'm giving you this as a bonus, okay? Because that's the trick. I told you in my channel, I want to be showing you those mistakes that your colleagues are making, that you are fortunate to find yourself in my group, in my channel. And as soon as you come here, I'm going to show you those secrets and you mitigate against them for you to make a success. All right. So for the reason above, I do advise my students not to trade a running flat until the confirmation move has broken the end of wave B. It's very important. So at this stage, guys, you can look for correction of that continuation, just as I've told you, that continuation push that broke the level of wave B. You can look for that correction and get in there. So this is the only stage that confirms that the structure is running flat and is a contracting flat and not go through, and it will not go through transformation. That's the only stage. So also in the case of contracting flat, the same thing you also see there. All right. So guys, in conclusion, understanding corrective structure is very key as market move more correctively than impulsively. Take this or leave it, guys. Take this or leave it. Market moves more correctively than impulsively. So you must understand corrective structure. Look at this. Look at this wave to the upside. How long does this happen, guys? How long does it happen? If you take a horizontal, a vertical ray here, drop it here, pick another one, drop it here. Look at this corrective structure, guys. After that move, after that push to the upside, look at the corrective structure from here to here, guys. Okay, take another vertical ray, take another vertical one, drop it here. Okay, can you see from 17 May 22 to 18 May 22, this impulse, this fast move is also a three-wave structure, but let's just take it as impulse now because it's fast. Just one day is made. But look at it, look at this, guys. 18 May 22 to 20 May 22, correction is still in the making, and it has not even finished. It stopped here because market closed on a Friday. I'm recording this video on a Saturday. Do you understand? Corrective structure stay more time. And let me tell you, look at the price level. Look at the price level. Okay, look at the price level. Let me show you real quick, guys. Can you see? Long time, short time. So it's very important you know that. And look at the price, guys. Let's look for horizontal ray from here to here for correction. Look at the price range. Then for impulse, look at the price range from here, guys, to here. So in the case of impulse, look at the price from 83.91 to 84.95, 100 pips in one day for an impulse. Can you see? So impulse is favoring price move. It's favoring the direction, it's very sharp in the direction of price. But look at correction. Correction between, for 2 days, correction, the price difference is 84.46 and what? 84.95. That is 50 pips. Can you see? So it has taken 2 days for correction to take place, and the difference in price range is just 50 pips, guys. But in the case of a sharp move, only in 1 day here, there is a price difference of 100 pips. Can you see? So you now see that impulses are favoring price move. They are moving in the direction of price, while corrective structure are moving in the direction of time. Okay, it's favoring time and the price is narrowing down. So when you understand this price behavior, you are combining it with the nature and the corrective structure you are seeing. you will get the forecast of your market cleanly and clearly. Do you get now? So that is it. You can, so before we go, we can identify, can identify all different types of flat for you real quick. Can you see this is an expanding flat? Can you see? You can see with A, with B, with C. With A, look at with B here, break the level of with A, with C, break the level of this. This is an expanding flat. Let's go and check another one real quick, guys. Let's go to 1 hour. 1 hour. Look for them in 1 hour. Okay. For this one. Okay. This is a regular flat, guys. I won't call this an expanding flat. It's a regular flat. Can you see A, B, and C? Impulse, impulse. Simple. Here, you are going to have a complex structure here, but you are having a regular flat in the middle. Can you see A, B, and C? You have sorry, let me do it again. Let me do it again. I want to show you all the corrective structure, all the flat that we saw. I want to show you. You see this one, 1, 2, and 3. That's a regular flat. Okay. Then you have 1, 2, and 3. That's another one. So most likely you are going to see another 1, 2, and 3 to complete this structure. And after that, you now have a move to the upside. So this will become this is a flat here, a flat here, a flat here. So this will now be a WXY structure. Simple. And I've told my intermediate students that we are going to have this Euro JPY come down before we make a move to the upside. Right now, as it is, it cannot go. Even if it's buying here, don't buy, because it's just to complete this structure X and it's going to come down. Boom. All right. That's another example of flat corrective structure. Let me show you another example real quick. This is another example of a flat corrective structure. This is a regular flat. Okay. That connect this impulse to this impulse. Simple. Can I show you more? Yes, I can show you a lot. Can show you a lot, guys, just to train your eye to see. Train your eye to see. Can you see after this drop, guys? What do you see? 1, 2, and 3. Okay. After that, drop. Okay. Let me show you. I'll show you real quick. Okay. You have a 1, a 2, a 3, regular flat, and drop. Plenty. I will show you, guys. I will show you. Okay. I will show you a lot. 1, 2, and 3. What do you see here? 1, 2, and 3. Regular flat. Okay. What is the impulsive move before? You have impulse to the downside, up, correction, up. Simple. I'll show you more. If you want me to show you, somebody will say, why is it showing us on only Euro GBP? I can go to other pair and show you. This is an expanding flat, guys. Drop 1, 2, and 3. This is A, this is B, this is C. B has broken the level of A and C has broken the level of C. So it's an expanding flat, guys. Drop. Okay. Can I show you more? Oh, yes, I can show you. You see A, I told you B is always in 3 waves, and see another one here. This is a regular flat, guys. Drop. Can I show you more? Oh, yes. This is a zigzag corrective structure, guys. You have a drop, fast move. You have a 3-wave corrective structure in the middle. You have a 5-wave here. 1, 2, 3, 4, 5. You may not see it here. It's 5 waves. This is a zigzag. A, B, and C. What is it correcting? Strong impulse here, correction here, another impulse here. That's all. Can I show you more? Yes, I can show you a lot, guys. A lot, a lot, a lot, a lot. This is a zigzag, guys. You have A, B is coming to, what's the rule? B must come to 51.8 or 61.8. That is it here. And after that, boom to the upside. This is a zigzag. Zigzag corrective structure. Can I show you more? Yes. This is a flat corrective structure. 1, 2, and 3. This is what is called a complex structure. I will show you in the next lecture, guys. I will show you why this is a complex structure. Why is it a complex structure? You have 1, 2, and 3 in the middle. Okay, and you have this drop, you have this drop. Okay, so this is A, this is B, this is C, you have this move. Okay, before you have this drop. Simple, guys. So can I show you more? Yes, there are many. You see this drop, guys? You see this drop? You see a regular flat, A, B, and C. Corrective structure, drop. Okay, you know, can I show you more? A lot. I can show you a lot, guys. I can show you a lot. Let me look for more. Let me look for more in the chat and show you. 1, 2, and 3. A regular flat and an up move. A, B, and C. Okay. A, B, and C. Regular flat. Up, regular flat, completion. Simple. Can I show you more? Yes. Can show you a lot, guys. A lot. A lot. Let me show you a lot. You know, I take eye to look for structure. You see this drop? You see this drop here? This drop here? You have 1, 2, and 3. This is a zigzag corrective structure and drop. And then what is with B? Where does it terminate? 50 to 61.8, guys. 50 to 61.8, guys, and you drop. That is the rule. That is the rule. So if you don't understand corrective structure, you don't understand wave analysis, you are deceiving yourself. This is a running flat, guys. Can you see a running flat, guys? How do we define a running flat? You have an up move, you have wave A, wave B, break the level of wave A, and wave C does not get to the end of the end of wave A. So this becomes A, this is B, and this is C. In order to prevent yourself from being caught, what do I say? Allow the level of this B to be broken before you confirm that this is a running flat. Can you see here it has not broken it? No, here it has broken it. So this confirms that this structure is a running flat. What do you now do? I say look for 50 to 61.8 of the correction, and it's exactly at this spot, guys. This is your trade. Boom. It cannot be as simple as this. I'm breaking this down for you guys free of charge. I'm breaking it down for you guys free of charge. You see, can I show you more? Yes, I will show you. Look at it. Look at the drop. Look at the drop here. Look at up, corrective structure in the middle, and another up. Okay, so this is A, B, and C. Let me show you. Let me make it clean. Do you see in the middle, regular flat, A, B, and C. This is a regular flat. But this regular flat, you have a move here. So you must have another move here to balance it. This is what complete the structure. So you have the A here. So these 3 waves in the middle is B. I told you B must be 3 waves. A is sharp, C is sharp. The middle is 3 waves. And then this impulse will now come here, boom, to the downside. Can you see, guys? It's that simple. It's simple. Just understand how it works. Just understand the theory and the guidelines. So that's it, guys. I've showed you example of running flat. I've showed you example of contracting flat. I've showed you example of expanding flat. I've showed you example of regular flat. So guys, if you find this content very useful, you know, and very helpful, if you have not subscribed to my channel, just subscribe to the channel. If you have subscribed, like, share, and comment. Remember, somebody commented in the video that I should do series of videos on Elliott wave theory course. That's why I'm doing this. So if there's anything you want as far as financial market is concerned, I can cover you. All right. I am not only a master of technical analysis. I am a master of fundamental analysis. By virtue of my certificate, by virtue of my degree course in economics, guy, I am up to the task to cover you. Whatever you want to know in financial market analysis, just post a comment. I'm going to respond with video. That is it, guys. See you in the next video where I'll be dealing with triangles and combination corrective structure. See you then. Peace.